Hello there, welcome back to Accounting Space. In this video, we want to look at a question from the March 2023, and it's an essay question. So we are going to look at an essay question on economic systems. So our question is discuss the mixed economy under the following headings, whereby the first point is characteristics, and the second point is advantages, and third point is called disadvantages with 26 marks. Then on the second part of the question, it reads, how does the government intervene to regulate a mixed economy? So this part is the additional part with 10 marks. So this is a question, remember. So obviously, we have to follow the layout whereby we are going to start with the introduction, we go to the main body, and then we finish with the conclusion. So we have to take note that within the context of this video, we are only going to look at the main body. So in the introduction, remember the requirements that we are just supposed to define a common term that we have in your essay question, or you just look for an economic term that you are having in your question that you have just to define in the introduction. You have to not to write many ideas in the introduction, but mainly just define the term that you pick. There might be two terms. So we are saying at least one term that you see in the question. So if you check in our question, we have got a mixed economy as a common term that we are seeing there that we can define in our introduction. So you'd see that the description of our mixed economy, we are saying this is an economic system that accepts both private businesses and nationalized government services. The nationalized government services that are also part of a mixed economic system is we're talking about public utilities, safety, military, welfare, and also education. So at the end of the day, you would see that a mixed economic system also promotes some form of regulation and to protect the public. So basically, that's what we have in terms of a mixed economic system. So basically, it's a combination of the free market system and then also the centralized economic system. So going back to our question, we are going to start by looking at the characteristics of a mixed economy. So we are having our characteristics in the first part, whereby the first one is a motivation. So motivation basically is an internal state that drives individuals to engage in goal-directed behavior. That's the brief description that we can give in terms of motivation. So the explanation that we are having, we are explaining from the point of view of the private sector and also the public sector. So first point, in the private sector of the mixed, producers and consumers are assumed to be motivated by self-interest. So we have self-interest being the driver under the private sector. The second point, in the public sector, it is assumed to be motivated by the necessity to satisfy the social need of a community. So that becomes under the public sector, which is obviously the centrally planned economic system. So we go to the second form of our characteristic, whereby we are now looking at ownership. So we have the explanations also explaining from the point of view of the private sector and then the public sector. So we can start with the first point. So the first point reads, in the private sector, consumers and producers and organizations own most of the factors of production. So we are seeing that there's private ownership in the private sector of factors of production, which are the resources. So this is what we have under the private sector, whereby now in the public sector, we're saying there is state ownership in case of some organizations that we can include under public sector. We've got Transnet, we've got Telcom, and also the post office is also part of the public sector. So basically, this is what we have, whereby we have a state ownership under public sector, and the private ownership obviously is under the private sector. Then we go to the next point of our characteristics, whereby we also talk about competition. In the private sector, competition is maintained and produces a variety of goods and services. Obviously, in the private sector, we do not have any barriers in terms of anyone who wants to operate a business. So anyone who wants to operate a business will operate a business under the private sector. So from that sense, we are going to have many businesses are providing or producing goods and services. And at the end of the day, we have a variety of goods and services, which obviously is going to be an advantage from the consumer point of view, as they are going to widen their choice base. So on the second point, we are saying in South Africa, rivalry in the private sector is maintained and promoted by the Competition Act. So the Competition Act is the one that facilitates the essence of competition in South Africa. Then you go to third point, the public sector provides protection, healthcare, education, social welfare, and economic services. So that is under the public sector. Then lastly, government enterprises monopoly. So at the end of the day, we would say that in the public sector, we mainly see the essence of a monopoly taking place, whereby we are seeing a state-owned enterprise being the only one that would be operating in a certain industry. So that becomes a monopolizing. So this is one of the characteristics that we can try to explain from the point of view of competition, that when we have got public ownership, we have it being characterized by monopolizing. So basically, this is what we have. Then we have also, as part of our characteristic, which is the last part, we are going to talk about state intervention, which is mainly described under the public sector. We are saying government interfere in order to realize social and welfare objectives and to improve the functioning of the market. So when we see the government intervening in the activities that are transpiring in the economy, the main objective is to improve the functioning of the market. So this is what we have. So if you try to go back to our question, you'll see that we are talking about characteristics and we have looked at characteristics. So on the second point, we've got advantages. So we are going to also talk about advantages, whereby we are saying advantages under the private sector. The first advantage that we have under the private sector is that private ownership, the profit motive, and competition are the forces that ensure the production of a variety of goods and services. So we are going to say that there is a profit motive in terms of the operations of the businesses that we see under the private sector. So in that sense, it's going to ensure that we have a variety of goods and services are being produced. So basically, this is what we have. Then the second point, on the advantages of the private sector, it supplements domestic variety and choice. So we see that since we have the private sector, we are going to have many businesses that are going to operate. And it's going to enhance the issue of a variety of products that are going to be available to the consumers. So this is what we have on the second point. The third point, exports create employment and contribute to economic growth. So as we have more businesses that are operating again, the potential to produce more goods is also high. And in that sense, we are going to see the improvement of economic growth in the country, as we are going to have more market value of goods and services that are going to be produced in the country. Since we are saying there is competition, every business that wants to operate will operate. So this becomes an advantage under the private sector. So we can move on to the next part, whereby we are looking at the public sector. So these are the advantages that we can also try to raise from the public sector point of view. First point is saying protection through education, healthcare, social benefits, and provision of opportunities. Remember, our education services are offered from the public sector point of view. We also have healthcare services being offered. We've got also the issue of social benefits. Obviously, this we can talk this from the issue of maybe the social grants, and also provision of opportunities. So basically, that's an advantage from a public sector point of view. When you look at the second point, the public sector helps the market failures by providing infrastructure and the creation of a solid economic framework. Then the solid economic framework, we're talking about law, courts, and also we're talking about economic rights. So basically, this becomes an advantage from the point of view of the public sector. Then we have also advantages that we can raise from a mixed economy point of view. Remember, we are saying in the mixed economic system, we have got a combination of private and public sector. Private sector and public sector. So we have looked at advantages from private sector point of view. We have also looked at advantages from public sector point of view. So Now, when we combine the two, they operate as mixed economic system. We have got also advantages that we can deduce from there when we have got a combination of private ownership and then public also ownership. So we have the first advantage of mixed economy being optimum mix. The first point is saying the optimum mix would ensure an optimum standard of living for all citizens. So it facilitates that there is a situation whereby we have got an optimum standard of living of citizens that is prevailing in the country. Then the second point, the government allows sufficient room for the private sector to pursue its market objectives. So this is what we've had optimum mix. Then I will go to environment and human rights. Mixed economies have better environment and human rights records that either centrally planned or that are either centrally planned or market economies. So we are going to see that the existence of mixed economy provides a better environment and also the issue of human rights is facilitated. So basically, this is what we have under mixed economic system. Then also in terms of the attraction of foreign direct investment, remember foreign direct investment, we are saying we can define it by having foreign business owners are coming to open their businesses in our local economy. In that case, it becomes a foreign direct investment. So we are saying if there is a mixed economic system in a country, it attracts foreign businesses to come and operate in our local economy. So that becomes the foreign direct investment. So the first point is foreign investors are willing to invest in countries that operate mixed economic system that command economic countries. Then second point, the increased inflow of foreign direct investment further stimulates economic growth and create employment opportunities. So this is what we have under attraction of foreign direct investment. Then if you go back to our question, you're going to see that we also have a point for disadvantage, which is the third point, which is the one that we are looking at next, whereby we are saying the first disadvantage of mixed economic system is creating poverty. So how is poverty created under the mixed economic system is what we have as explanation under that. Then first point is saying because the private sector has control over land and capital, it may be able and inclined to exploit workers. So we are going to see that there might be exploitation of labor, that is workers, and this can only happen when in the parts of where we have private ownership. That's where there is a possibility of exploitation of labor. Remember, businesses that operate under the private sector are businesses that are motivated by profit and making. So they do whatever they can do possible so that they can maximize profit making. So during the process of maximizing profit making, they exploit workers. So this is what we want to say. First point, which is something that can happen from the private sector point of view. And we know that private sector is also part of the mixed economic system. And so we go to the second point, through imperfect markets, the private sector can rob consumers and worsen the inequality of income and wealth. Remember, the existence of the private sector has got many negatives. Like the second point, it's what is implying is that when we have the private sector, it doesn't close the gap between the rich and the poor, but they will rather widen the gap between the rich and the poor, which is something which is closed under the public sector point of view, whereby we have the issue of taxation, whereby the rich are taxed, and then we also have the issue of the government expenditure in the form of social grants, whereby the poor are given a certain amount so that the gap is closed between the rich and the poor. So the existence of the private sector now becomes a disadvantage that can create a poverty. So that's the point that we're having under creating poverty. Then you go to crowding out the private sector. So what basically is a crowding out of the private sector? You'd see that crowding out the private sector has got what we call the crowding out effect. So the crowding out effect, it is an economic theory that argues that rising public sector spending drives down or even eliminates a private sector spending. So basically, that's the description that we have in terms of the crowding out effect, which is created by crowding out the private sector. So this is what we have. So on the first point, we are saying the crowding out the private sector because the public sector is control over the legislature process. So so this is the case that we have on this first point. The second point is saying the scale of taxation in public sector enterprises become so extensive and the private sector businesses are crowded out, and this leads to decrease in economic growth and employment creation. So remember, when there is a crowding out the private sector, we are saying the proportion of private sector in the country is reduced. So if the proportion of the private sector in the country is reduced, we are also going to save some negative effects, like we are going to have low economic growth. Remember, economic growth is measured by the increase of the monetary value of goods that are being produced from in the country from one period to the other or from one year to the other. So we are saying if you produce more goods than we produced the previous year, we say there is economic growth. So we would see that that is affected when there's crowding out of the private sector, whereby we are saying the existence of the private sector, the proportion that we have of private sector business that are operating in the country is reduced. So obviously we are going to have less goods and services being available in the economy. And at the end of the day, we are going to notice a decrease in economic growth. And also employment creation is going to be compromised also. As we have less businesses under the private sector, it means less workers are going to be accommodated in the businesses. It's going to result in unemployment, which is going to be a negative effect on employment creation. So this is what we have on this point. Then we go to the next point: unemployment, inflation, and fluctuating business cycles. So this is also a result of crowding on the private sector. Then also have the distribution of income is not fair. And then we have higher taxes on a few workers. And lastly, we've got centralization or concentration of growth in a city. So those are some of the results that we have from crowding out at the private sector, which is under disadvantages that we can deduce from the mixed economic system. Then on the last part, which is the additional part, we've got how does the government intervene to regulate a mixed economy, 10 marks. So this is the additional part. So the points that we have how the government can intervene. The government can intervene by, first point, reducing inequalities where there is an undesirable gap between the rich and the poor. So we have explained this, how does the government reduce the gap between the rich and the poor. And the second point, by using expansionary policies to stimulate economic growth in terms of a contraction. So we see that the main policy that is controlled by the government is the fiscal policy. So the fiscal policy is the one that can be used to stimulate economic growth. So when it becomes expansionary fiscal policy, we know that fiscal policy uses two main instruments, whereby it uses taxation as an instrument. It also uses government expenditure as an instrument. So when there is when it becomes an expansionary fiscal policy, what is being expanded is the demand. The aggregate demand in the economy is the one that is going to be expanded when there is an expansionary fiscal policy. So how do they play around with the two instruments, that is taxation and government expenditure? We are going to notice that taxation is going to be reduced so that less is taxed from the consumers, and they are left with more money to spend. So the aggregate demand is going to go up and decrease. So and then from the point of view of government expenditure will be increased, whereby we have the issue of transfer payments in the form of subsidies being given to firms that are facing high cost of production, so that they face a less cost of production. And obviously, the burden is lessened on the consumer as they reduce prices, and it stimulates a demand. And at the end of the day, we are going to notice economic growth in the country. And then from the point of view of government expenditure, we are saying it's more maybe we'll talk about social grants when they are increased. It means also individuals or citizens that we have in the country getting more income in the form of those social grants, so they can they can also have an upliftment of their potential to buy. At the end of the day, aggregate demand in the economy is also going to be increased, which is a point that is supporting the issue of using expansionary policies to stimulate the growth in terms of contraction. So we have a third point, which is keeping the prices of essential goods affordable for the poor. through administered prices. So obviously, this is the issue of price controls, whereby prices are not increased. So we have ensuring healthy competition amongst minimizing monopolies, and the next point, providing infrastructure to attract more businesses, establishment in the economy, and lastly, assisting infant industries by offering subsidies and other incentives. So infant industry, basically, these are industries that are starting to operate. So industries that are characterized by small businesses that are starting to operate. So basically, this becomes an additional part that we have. And obviously, lastly, we are supposed to conclude your essay by your conclusion. So, but within the context of this video, we are only looking at the main body. So thank you for listening, and hopefully the video was helpful. Let's not forget to subscribe and share to our channel. Let's meet again in the next video. As for this video, I'm signing out.